Hello and welcome to another episode of the Federal Church Presents Better Than Bloomberg. Continuing our coverage of the 2023 global financial system collapse, the worst ever, because you didn't pay your damn tithes. Yeah, good note here from yesterday from Zero Hedge. It's like there's another bank to fail in the epic bank failure. Or banking system failure, I mean. And it won't be the last, because when you take a look at their balance sheets, damn near all of them are insolvent. So JPMorgan and PNC to buy First Republic after FDIC seizure first leaves taxpayers holding the toxic stuff. So they get to print money so that JPMorgan and PNC Bank can buy all the good stuff, which I doubt there's much. And then everybody else gets to be made poorer. So as the weekend begins, the Wall Street Journal reports late on Friday. Oh, I didn't have some now, but this is another great time for another dose of the humble pie. Goes great with the side of bank failure. As the weekend begins, the Wall Street Journal reports late on Friday that big banks including JPMorgan and PNC are set to buy First Republic Bank, but not in a private market-arranged deal, but rather in a transaction that would follow a government seizure of the troubled lender. It's insolvent. A seizure and sale of First Republic, which would wipe out the equity of FRC and potentially impose on First Republic, impose losses on creditors, could come as soon as this weekend, the Wall Street Journal sources said. And so JPMorgan, which is already the largest U.S. bank, is about to get even bigger by scooping up all the good FRC assets while leaving the U.S. taxpayer holding on to the toxic ones. That said, it wasn't immediately clear whether the $30 billion in deposits funneled by JPMorgan and other banks into FRC will be treated as insured funds. Why should they be insured? Nor was it clear how a wipeout of this capital, which would spark a systemic crisis, simply because the Fed is now running a policy of monetary tightening through banking collapse. Banking system collapse is probably what it should say. And he's absolutely right there. Because when the banks are insolvent, they're not loaning out anything. You are in contractionary monetary policy. And when they go under, well, in essence, the monetary supply does also starts evaporating too. Which, of course, they'll print billions of dollars for. Having failed to contain inflation and tighten policy using conventional means. So, 1640 Eastern. As many expected, given the intraday collapse of FRC. Who predicted it, by the way? Who prophesized it correctly? The divine right of Reverend here. Reuters reports after the bell that the FDIC will imminently put the bank into receivership. Shares collapsed to a $1 handle. The after-hours trading down 70% on the day. FRC was trading at $120 at the start of March, and now it's trading close to $1.20. And it's gone. First Republic Bank shares are halted for volatility, having collapsed 50% back to record lows as hopes of a private deal fade. And there's no such thing, because there's nothing good there. They're simply depository institutions, and they could not do that right. So now, all the toxic assets get to be bailed out by the taxpayer, making everybody poor. While JPMorgan gets the good stuff. So former Treasury Secretary Larry Summers criticized Washington regulators and U.S. banking giants for not having already figured out a solution for the beleaguered lender First Republic Bank. I'm surprised and disappointed that this situation has continued to linger as long as it has, with the bank's stock down 95% and credit gauges deteriorating, Summers said on Bloomberg Television's Wall Street Week with David Weston. I hope that between the banks, the FDIC, and the other public authorities, that the best way forward will be found within next week or 10 days. There are things like forest fires. It's much easier to prevent them than it is to contain them after they start to spread, Summer said. Well, you're already well into your banking collapse. He didn't offer a preference for either an FDIC takeover or some private sector-oriented workout. But we need to figure out the answer to that question as quickly as possible and move on. Imagine the deposit outflows occurring today. Question, oh, you have to excuse me there. The dirty little money changers are still convincing people to medicate my food. The question now is simple. Will they make it to the close without the FDIC stepping in? And as we saw there, they did not. After reporting dramatically worse deposit outflows and aggregate banking system flows, suggesting things are getting worse, not better in April, the Financial Times reports that there had been a shift in tone among the First Republic Bank advisors compared with Tuesday and Wednesday, when First Republic shares fell 65%, and fears grew that it was close to being taken over by the FDIC. The conversations about the bank remained fraught, and the people cautioned that it was not clear that a solution would be found. Banks were reluctant to put their shareholders at risk of losses without some sort of government participation, which is notable since Reuters reports that according to 3 sources familiar with the situation, U.S. officials are coordinating urgent talks to rescue the beleaguered regional bank. Rescue. We'd slice and dice it and then leave the taxpayers, the one holding the bag of the toxic assets. As private sector efforts led by the bank's advisors have yet to reach a deal. It's a fucking depository institution. You couldn't do that. The government's involvement and presumably some hope of backstopping commitments is reportedly helping bring more parties, bring banks and private equity firms to the negotiating table, one of the sources said. Reuters adds that, though that it is unclear whether the U.S. government is considering participating in a private sector rescue of First Republic. However, the government's engagement, has emboldened First Republic executives as they scramble to put together a deal that would avoid a takeover by U.S. regulators. Too late. We saw with the later notes. Specifically, the Financial Times reports that one proposal that may be part of an eventual solution is for some of the banks to buy some of First Republic's long-dated assets for more than their current market price, allowing the lender to shrink its losses. People familiar with the situation say that this would probably not be enough to stabilize First Republic on its own. Bear in mind that the big banks have $30 billion in deposits at the embattled banks, so the FDIC has a problem already. And FRC bonds ain't buying it at all. Look at that implosion. Oh, yeah. First Republic shares were up around 5% in the pre-market, but as we see, they're in receivership in the later notes. I've already raised the earlier stronger reserve. And this is from back in time, so it's in receivership. I wouldn't doubt if there were other banks to fall in the coming days and weeks. In fact, I know it's a damn certainty because they're all insolvent. Damn near all of them are insolvent because you did not pay your tithe. Make sure to pay the Bitcoin wallet below. Membership in the S&P 500. Yeah, it's over. That was pretty funny too. And this was before it went to receivership. At roughly $1.2 billion, FRC has by far the smallest market cap in the S&P 500 after wiping out more than $21 billion in market value. Bloomberg notes this is a problem because companies must have a market cap of at least $12.7 billion to be considered for inclusion in the S&P 500. Well, they don't have to worry about that anymore. And it's gone. And again, because you did not pay your tithe. You should pay the money in the Bitcoin wallet below. Also take Cashapp.